Good morning, Alpha Traders. I am alive. Barely. Went down to Miami. Went to the fucking Catalina whale mixer. I got some things to say about it. And about the three guys that created this project. And I'm not even going to call it a project anymore, you know. In the NFT space, it's all projects. Dude, this is a real business. A lot of people are reporting back about Michael and Carlo and Alec, and I'm not going to forget about Josh. Josh came up to me and pretty much told me, hold on to your pants. We're getting ready to blast off. They got a big record deal coming out. So what that entails, I have no idea. I think they're bringing on a record label. There's a lot of whispers. I'm not going to say anything right now. I have a pretty good idea who it is. And when everybody finds out, they're going to be like, I thought NFTs were a scam. Well,
Kanye West.
No. These guys are literally trying to turn the entertainment industry upside down, put the IP rights back in the artist's hands. And I think there's a lot of artists. There's a lot of art here. Maybe a little hints. There's a lot of artists out there that started record labels that feel the same way and might possibly want to join up with Wagme Beach. There's a little hint of who it might be. Okay, let's see here. But yeah, I survived the Catalina whale mixer. I don't know how. It was nonstop partying, bottle service. Pretty crazy. We had a great time. I'll tell you what, these guys, you know, I'm all about ROI, right? All about ROI. And I got a little bit of a return on my investment. It was fantastic. It was fantastic. My head is still spinning. Lots of great, met so many great people. It was incredible. I mean, the business itself just attracts the same type of people. We live life to the fullest, right? Work hard, party even harder. And if you're at the mixer, if you're out there, you know exactly what I was talking about. All right. Really? All right, I got dogs. I forgot. When I went to the mixer, I forgot I even had animals. Here, go out. Go on. All right. So, yeah. It's a good time. It was a good time. And that was a fib about the dogs. I miss my doggies, you know that. Did help me, though. A lot of people gave me a lot of love for my little boy, Max. That was good. Still miss him tremendously, but yeah. He's roaming the property. Everywhere I go, there's 4 little paw prints next to me. Not little. I don't know what the hell I'm talking about. He had big paws. All right. Let's get to these charts. Now, I missed yesterday. I was going to try to do the live stream. Yeah. If you see that GIF in the general chat, that was me yesterday, and I am not shitting. Still feel pretty bad, but yeah, they're wanting me to come help out at the restaurant, so I'm like, might be shit out of luck this week. I don't know. We'll see how I feel. But yesterday, first thing I noticed, of course, I was looking at charts. I just couldn't speak. The dollar went on a run, right? Dollar went on a run. I mean, this baby, what percentage? Let's see here. Top to bottom. I mean, it wasn't massive, but when this dollar moves, right, we know when the dollar pumps, risk on assets going to dump. At almost 1.2%. Literally over probably about 5 hours. I think pumped about 1.2%. What happened to SPY? It dumped, right? I'll tell you what, crypto, not as bad. Not as bad. I was pretty surprised. Bitcoin didn't really pull back too damn much, right? Not even, went down to the top of the weekly range, right? So BTC came down, tested the top of the new weekly range. Let's see, Solana, same thing. Came down, tested the center of the new weekly range. This is what you're going to see when you're coming into new weeks. Thing is, what we need to find out, what I would have covered yesterday, let's check out. Let's find out where this monthly is. Let's see where the new monthly range is. And it's going to probably be above. Yes. Whoa. Excuse me. That's how I feel right there. So the center of the new monthly is at 18K. A little bit above. The bottom side is at 17.6. Now, first thing we got to do. Has it been tested? Has it been tested? Boy, it sure made a run, didn't it? Made a run up there. How high did it get? 17.4. Tell you what, man, when it comes to a monthly, you get within $200, you can actually call that a test. But I'm telling you, these data sets love to run into the meat of these ranges. So don't be surprised if you see BTC pump. Now, why am I saying this? First thing I'm going to do, I'm going to go over here. I've already got it pulled up. Here is the new monthly. Okay. First thing I'm going to pull up, let's look at the projection. Look at the monthly, right? Excuse, hold on for a second. This is what I was afraid was going to happen. I'm going to start seizing up. I'm like a fucking internal combustion engine with no oil. All right, we're down here at the 95.4 Laplace distribution range. So what do these probability levels mean? There's a 95.4% chance on this macro time frame that BTC doesn't close a monthly candle below that range. Right now, this month, it's about a little tick under 16, or actually more than that, 15.5. 15.5, which was the low. Right, which is the low from this dump from the all-time high. Have we seen the sell-off? The returns oscillator says yes. I've been talking about this. We have been building bull divergence on the monthly, the whole dump. Okay, we have got a lot. The fissures are at the bottom of the deviation bands. At least two of them. Two of them are down. One's at the 3SD. One's about right in the middle of the 2SD, 3SD. But yeah, they're all down pretty big. Volatility. That should pop out at you, right? Volatility on the monthly. Pretty crushed. Grades down, right? Alpha volatility grade. What is that? It's a combination of implied volatility and historical volatility. It's a powerful, powerful metric in this indicator. We love it. We've got the 981 length on our volatility percentile. It's at a 28.4. But yeah, the low length, the 525, is crushed at a 0 along with grade. So what's that saying? What happens when volatility contracts? It expands. All you got to do is have an indicator. Doesn't matter how much of an expansion. When volatility... Wow. I see Dr. Grizz. Dr. Grizzly was at the Catalina Whale Mixer.
Oh yeah, man. And I'm paying the consequences as well, guys.
Yeah. I got hit hard. There's a lot of people though. There's a lot of people that came down with a bug. So yeah, man. I know a lot of people are sick. That's what happens when
we still out here, man.
We still going. Yep. Take more than that. Take more of that to keep me down. I love talking about the markets. All right, but yeah, the volatility is ready to expand on a monthly. So all that being said, Z-score, boy, I feel a lot more comfortable if this Z-score was down in these confidence intervals. You know, this is saying, hey, this could turn back down. I didn't get the bounce off the zero mean on the returns oscillator either. It started turning down. Goodness gracious. And DLP is actually building some steam, but it is down here, right? It's down by, let me see here. Give me 1 second. It's actually cruised through. Very interesting. I'll tell you what, man, this thing's about to turn around, I think. Right? This is just one man's opinion looking at the VEPS charts. But,
we got that intersect coming up with the mean and the RMLRs tomorrow, basically.
On weekly?
On daily, on Bitcoin, for example.
On daily. Let me turn them both on. Because, yeah, here's the weekly. This is what I was talking about.
Yeah, there's that one there. Right? So, I know it's coming out. On daily. I'm talking about the ones coming up.
Yep. Sorry. I'm going to flip to it here in a sec. I was talking about getting this data set up above both these lengths of the RMLR, which it has. Give me a second, guys. My goodness.
Yeah, on monthly, it happened, last month or two? Yeah, October.
There we go.
Intersection. Now, in candles out, last month we got a nice movement already, and this month it has more. But on the daily itself, you can see on the daily that there's an intersection about to happen tomorrow. In the coming hours, could be today, tomorrow, the next day. But it looks like it's set for the next couple of days.
So people are always wanting signals. Signals, please.
Right.
I talked about this data set getting up above both of these lengths. It is, right? We've already made a run up to the weekly, looks like 68.3 Laplace.
Yeah.
My target would be this 33 power mean, 22.5. Would that wake the bears up? Oh, yeah. That would, that'd be hammering some people right there. People aren't expecting it. People think this market's just going to dump. Hey, man. There's been a lot of selling going on. There's a lot of exhaustion, right? Really haven't had a move to the top side like I've been expecting, so I'm still waiting for it. I really am. And now that we're above these RMLRs, it could happen. Let's flip to the daily, show you what Yasha's talking about. Yep, there we go. Oops, scissor time. All right.
Yep. Scissor with a mean in between.
Jeez Louise.
Tasty, man. Look at it every other time it does that.
Yeah. Oh, it's...
You get some candles, you get a nice little move there.
Yeah, and one thing I did notice, I just didn't point out on the weekly.
Right.
Bring this back down.
Yeah.
Look at the last time the bands collapsed on price action. It's tighter than it was before. These bands are tighter than it was before the dump from was it for 48? Yeah. Really tight bands, and we're above on the weekly, right? We're above both those lengths on the weekly. You drop it down to a daily, and we are sandwiched right in between these two lengths, the 11 length and the 30 length. We are below the 33 length power mean, like Yasha said, is right in between here. So from looking at the weekly, right?
Yep.
So what's his power mean at? 17.
Well, so you're in the 33, and the 30 is right above the 30. I mean, it's very similar, obviously. Yeah.
So we're talking about 17.75. I could see this getting up here and testing. Let me check this out. Make sure I got these lengths right. Okay. So that is the 30 length. So we're below the 30 length there on the daily. I see that getting tested. 17.750. Right? Does it have to? No. But everything I'm seeing on the weekly, and then I look at the daily, right? We are above this 11 length. Finding some support, but I'll tell you what, our predictor is definitely flipped. The predictor's flipped to the downside. And we know how powerful that is, so we're going to have to wait. This thing definitely could dump. I'm not saying it can't. I'm just looking at the VEPS charts. I wonder if this will pull up a 45. Yeah, it's not going to pull it up well enough. Let me look at a 3-day. Where are we on the 3 to 3-day? Actually looks pretty damn good, except we're below both these lengths. Actually, I'll take that back. Now, I know if you're watching this for the first time, this is going to be really confusing, right? What are you trading, star charts, Bilbo? No, we don't trade star charts. Maybe moon cycles. Just kidding. But anyway, let's see. Oh, so what is it? 2-day?
Just the VEPS.
We already ran
VEPS
up.
Kills.
You can see a wick right to that little blue dot right there. And where was that first standard deviation? It was right at, I gotta get the length right. Yep, it was right at the 30 length RMLR. I mean, right at it. Got a wick right to it. Let's blow it up a little more so you can see better. See the wick going right to the blue dot? This is why we trade probabilities, right? Did we get a rejection there? Sure did. Pulled back. It's okay. We're just going to have to see how this traditional market opens up. I want to look at some correlations too, because, God, it almost feels like these correlations are breaking between crypto and traditional, which it wouldn't surprise me. The reason why they got so correlated in the first place is because a lot of big firms got in on Bitcoin, right? So there's a lot of that same money, man, was floating around.
Guess who's buying up loose exchanges, by the way? Guess who's looking at buying up more loose exchanges?
Who?
Goldman Sachs.
Oh, of course.
Yeah.
They're probably going to
coming in, man.
And there's whispers about all these exchanges that were counterparty to FTX. It's going to be who knows what's about to happen. Now, how funny would it be if it's like all these big bankers and shit? Because if you know what a fucking Bankman-Fried, I call him Bankman-Fried, his parents, right? I mean, they're connected. It's like, what could be happening here? Could be trying to crush all these exchanges. Wouldn't doubt it at all. And watch these big banks, all of a sudden they're going to take that whole infrastructure and they're going to reopen these exchanges.
That's why Goldman Sachs is looking at it, right? They want to get everything on the, for a nickel.
For sure. For sure.
5 cents on the dollar, you can buy these exchanges now because they're all doing what they have to do to remain solvent.
Yeah.
And float them, whatever their debts may be.
Yeah. It's all this happened for a reason. This wasn't just some dumb kid trading billions of dollars. That's a joke. If people believe that it was just, if it was him and his little whatever, looked like about an 18-year-old girlfriend, I'm sure she was older than that. Man, no way.
Yeah.
No way. This is bigger than what everybody thinks it is. There's bigger parties definitely behind this.
It's certainly being exploited by people that are bigger than them. I mean, that's for sure. Like they saw this as a prime opportunity to come in and move the vultures in, first with the regulators and then with the bankers to take it all up. So that's not even a question, I don't think.
For sure.
So it's very obvious. Like they're exploiting the opportunity because the bottom line is, I mean, I go off on a rant here too much, but the bottom line is the central banks and the Fed, and the government all realize that the crypto system is designed effectively to be a better system, right, than the centralized trust-based system. It's because crypto is trustless, you don't need to trust the counterparty. And what are all the traditional systems based on? Trust. What are all the big banks based on? Trust. They don't want to rock that boat. But if the boat is going to be rocked because it's inevitable, they want to own that boat too. So, what's the easiest way to do that? Try to regulate it as much as you can, even though you can't really regulate Bitcoin because it's global. It's not controlled entirely, in the U.S. It's decentralized. So, they can only control what's in the U.S. within their control. And so getting the same thing for other cryptos. So regulate it all you can and then sell it off to the big banks. Let them buy it up. But again, there's limits to how much they can buy because it's a global system and not everybody is going to want to sell them their coins for obvious reasons. But anyway, without having to go off on a rant.
That's all good. Here's the recent dump from up there when we were like 21.5. Here's the projection. You can see we broke outside of the 0.99 and 99 probability level. Immediately goes sideways back to the 99.7. Kind of wrote it down a little bit, but now boom. So what do we got here? 95.4 percentile range. And that is, there's a 95.4% chance this data set gets back up here. And where's that at? 17.8. Right? We were just talking about 17,750. My brain's so fried, I don't even know where I was talking about it at, but I know I was. Oh yeah, it was that mean. Wasn't it? Let me see here. Go to the weekly. No, was it the daily? Yep, there we go. It's actually the 30 length RMLR on the daily. That's what I was looking at. Same area. So you got the RMLR on the daily at about 17,750. And then, boop, the projection, the 95.4 is right there. This is how all this matches up. That's why we love using these indicators. Let's see. Volatility, definitely low. Actually contracting right now. Heading down in the negative correlation.
Low, and look where the returns are at. Literally right at the power mean and right at the right near that RMLR. Like it's not a coincidence. Right? The maths work out beautifully.
Yes. Yeah.
Saying it forever. When you see the price action at the mean, get ready for the move, especially when you see the volatility low, which is, again, that's when it happens. It's either extremely high or extremely low when it happens. Oh, it's extremely low. No surprise.
When you see volatility, smile. Isn't there a John Waite song?
So look at the long range correlation, by the way, on the volatility. Yeah, it's like low volatility and super low negative correlation about to start sloping up. What do you think is going to happen? There's only one thing the volatility can do. There's only one direction the correlation can go. What do you think is going to happen on the long range? Go up.
This is interesting. Oh. Yeah. Well, tell you what, from this high on the returns oscillator, this is all points of bear div. All points of bear div. We definitely are below the zero mean. Man, look at these fissures. Talk about a scattered rat pack. Holy shit, man.
Yeah.
That's incredible. Same time, look at the DLP, right? The DLP's got some points of, actually, yeah, from this low it does. From the low. That's the only spot, though. There was definitely some bull div. Could that have been? Yeah, man, it could have. Could have rocketed up. I even see a little bit on the Fishers. And, of course, boom, on the returns oscillator. But every point after that, it's bear. It's definitely bear div between returns and price action. This is E-score after the dump, right? We got these outliers down into these confidence intervals. It's slowly working its way back up. And there is no bear div there. It's just, and actually on these lower length Fishers, there's none. Yeah, this is a mixed bag here. And like always, we're going to tell you, right? These data sets can do anything. This is why we trade low time frame volatility, right? If you're trying to trade a daily or a weekly, hey, you can get a good bias to go in your intraday trading session, but all the meat is in these low time frames. And I'm talking about down here, trading these low time frames. When I'm feeling really frisky, I'll get on the 1 minute. But most of the times, I'm down here getting my entries on the 3 and 6. Right? On the 3 and 6 minute charts. And taking profit often, real quick. I'm not in a trade very long. You recognize what's going on in the VEPS. You know a quick pump or dump is coming by the correlations. And you just jump in on the move. It's a no-brainer. If you're trying to swing trade volatility, you're going to get wrecked. You're going to get wrecked indeed. Because these markets are just incredible. This is where options comes in, right? This is where options comes in, which that's where my attention is definitely being taken into the options market. Where, hey, I talk about not using leverage all the time. If you know anything about options, it's inherently built in, and a lot of it. So you got to be really fucking careful. Same thing. And if you go over and watch Tasty Trade, they'll tell you the same damn thing. You're not in these positions till expiration, right? Options are made to sell. It's probably one of the smartest things our former compadre always used to say. That's one thing he always used to say, even though he's a horrible trader. And he's probably just parroting shit he heard. But it's true. Options are made to sell, right? There's been so many, and that's what I like about the guys at Tasty Trade too. They run a lot of simulations, right? Just to see how profitable different trades are. And I'm telling you right now, buying premium is a nightmare. You lose more than you win. The P&L never works out. Now, can you get into some good runs? Sure, man. Look at the Pelosi's. How many fucking Google calls did they buy? I can't remember, but somebody was talking about it. They bought a lot, and that's expensive, man. You're buying Google calls. So yeah, they put a bunch of money. They're thinking this market's going to turn around and pump, right? They're going to run these calls to the moon. I'm selling premium, man, and when I hit 50% profit, I'm taking it, right? It's all about taking profit. Even I don't care what you're trading, right? You got to take a profit, man. There's no doubt about it. Let's see here. So there's the daily. What's this 4 hour looking like? Well, 9:23. I'm making it to the market open. Well, this 4 hour, man, I'd like to say there was a bunch of hidden bull, but let me blow this up real quick. I got to see where this data set is. I'll take that back. I will take that back. All right, so this is hidden bull right here, but look at this returns oscillator. We've got these little moves up here, and you can see the correlation under the returns oscillator was positive, but it went negative. As the return oscillator was crossing the zero mean, got negatively correlated, but I see that's waning. Excuse me. Let me see here. Boy, these Fishers are in lockstep, though. Trying to turn up from the 2SD band. Volatility. Wow. Okay, so Bitcoin on the 4 hour. We've looked at those, the daily. We've looked at the weekly. We looked at the monthly, right? What's all the volatility look like? Monthly, crushed. Weekly, not too bad, 76, but look at the 981 down here, man. It's still coming to the downside. Grade. This is an interesting read on the weekly. Let's pretend like we didn't even talk about it. I'm just kidding. This is why we go down through the time frames. But here's one thing. We're contracting negatively correlated. We know what happens there, right? We know what happens there. 3-day, volatility low, 2-day, contracting positively correlated. Daily though, crushed. All right, 4 hour crushed. So you got the 4 hour, the daily, the monthly definitely crushed. We got a move coming. So we're coming. We ran on this dump right here. We ran these Jesus, sorry guys. The Z-score of log returns down through these confidence intervals with an outlier. Usually when that happens, this Z-score is going to work its way back up to the top side. Let's see. We already looked at all that. Boom. So that's a 4 hours, a 90 minute. Setting anything up? Boom, boom. No. No. All the fissures are up. Volatility contracting, positively correlated. I imagine we are probably going to get a move when this market opens. 45, which exactly what I'm getting ready to do. Okay, 45-minute volatility's crushed. Gonna need to be up, bull div. Fissures are all up. Don't like the Z-score for a move to the top side at the open here. Let's see, 33. I'm going to see the same. You're up there in the upper confidence intervals. Was that coming off bull div too? Yes, it was. What about what's happening on this low time frame on the 15? Let's see here. Working its way back up to these confidence intervals. Of course, you get an outlier down into the lower ones, you're going to bounce right to the top ones. All the fissures are turned up above the mean of the deviation bands. And hidden bull. Hidden bull right now. Very strong correlation too. This could be getting ready to pop. Right? I definitely didn't like that 45-minute read, but this 15-minute, considering what we got, 4 minutes to open. Let me flip this on SPY real quick. Could look at the Russell, but we'll go SPY. Okay, pre-market is exactly where we closed yesterday. I say we, like I'm SPY. Sometimes I like to think I am. I am a little SPY. If anybody saw me at the mixer, I'm definitely a little SPY. All right, let's go here. Wow. 15-minute. I mean, look at all this bull div. Look at all the bull div that was created overnight. I mean, this thing could pop. All the fissures are up. Okay. Or overnight. What am I? Fuck, I forgot to flip the SPY. I'm talking like this was overnight. No, so going into all day yesterday, right, when the dollar was pumping. Get with it, Bilbo. You're talking about SPY. So when the dollar was pumping, SPY dropped, right? But look at the returns oscillator. Look at the returns oscillator. Now all the fissures by the end of the day turned up because we did have a little relief right there. Last few, where are you at, SPY? Yeah, like the last couple hours turned up. But look where it checked up to. Here's the new weekly on SPY. Did it get tested? Oh yeah, right. Opened up the new week above, just right down through it pre-market. So definitely has been tested. 405, is the bottom. I could see this being. The thing is, yesterday we got a wick right to the S2. All right, that is a support level for that weekly volatility range. Rejected from it. So I'd feel a lot more comfortable if this pre-market was up above there. It's up above there, because then I could definitely see today maybe running up and testing this 405, testing this weekly range again, for sure. Now, where are the E-minis? Let's check it out. Same thing, went right down through the weekly range. The E-minis are really a lot closer. Excuse me. Goodness gracious. And what's the dollar doing right now? Dollar's starting to pump. Dollar's starting to pump. So we're going to have to wait here. What, we got a couple more minutes? Okay. Let's go over here. Boom, and boom. Had that daily close. Oh boy. Okay. So there's a lot of bear div. All the fissures are down. Volatility is expanding, starting to slope down in the negative correlation. Let me see here. I'll tell you what though. Just locally on the daily, last few days there isn't. Actually, maybe he's going to start building some hidden bull. There's a lot of conflicting things on these time frames, though. A lot of indecision, what I'm seeing. Now, the 4 hour definitely is building some hidden bull. All the fissures are down, though, so we're going to have to get this open. Starting to slope negative correlation. Expanding as well on the 4 hour. 90 minute. I should have done this earlier. Okay, so when you go to the 90, boom. We got bull div. Above the zero mean on the returns oscillator, and at the close yesterday, that 90 minute, it was expanding, positively correlated. Closed above the 68.3 Laplace band. That's always good. We literally pre-market just dropped below the close from yesterday. Excuse me. Woo! I'm going to feel this later. Okay, let's see here. This 45-minute looks pretty damn good. Look at all the bull div. Look at all the bull div on the 45. There we go. So we got the market open. Let's take a peek over here real quick. All right, SPY. Where is the daily? Bottom side of the daily is at 400.24. And where's the 1SD? 402.83. Yep, there's the bottom. So 95.4 Laplace is right below the bottom of the weekly range at 404. All right, that's good. Now, I was just down here. So on the 45-minute, at the end of the trading day yesterday, man, I can't even talk right now. You had this outlier on the Z-score. I mean, below the 99% confidence interval. Ton of bull div. I mean, from way back, right? From way back here. So we got a bunch of bull div. The Fishers are turning up. And you've got the DLP down in the confidence intervals. Doesn't like to stay down there. Go back and look. I mean, usually it's just like the Z-score, right? You're going to end up popping right back to the top side. For sure. They're pretty much, look at the indicators. Let's not lie, right? They're pretty much one and the same. I mean, I'm not going to go that far, but trust me, these things are, they are very similar, right? Because what is the DLP? It's a deviation log pro. It's deviation weighted with a, man, I can't even talk right now.
Word salad, man.
Yes,
word
it is
salad.
a word salad. So we'll leave that until I'm a little better, because I am fumbling the ball.
Literally, the market's opening. Good time to be trading if you're trading. This is the hour, the golden hour for a lot of traders.
This is the golden hour. This variance is pretty flat. I'm going to see this thing pop. If SPY does pop up here, you're going to see all this flip around on the 45. What's the 33 saying? We got some bunch of bull div probably up. Bunch of bull divs. And so the 33, all the Fishers are up. The DLP is out of the confidence intervals. And right now, kind of at market open, looks like not a lot of volatility right here on this low 33. Yeah, it's low enough time frame. Kind of contracting right now. So we're going to just watch the correlation. You can see contracting right here. Boom, boom. Just walking up. This thing's trying to move too. And then we're going back to the 15-minute. Right, all the Fishers are up. Bunch of bull div. Random price action. Almost totally random. Probably going to flash here on the next candle. So we definitely got a move coming. Let me see here. And we're probably going to cap this stream at an hour. So we got about 28 minutes. Now I'm going to go back and fall somewhere. Holy crap. I was hoping to go in and help them at the restaurants. I mean, they're busy as shit. But it is what it is. There's a reason why I got out of the restaurant business years ago. If anybody's in it, P-Funk will attest. Run for your life. It's good money, but yeah, it just sucks the life out of you. It will suck the life right out of you. Dixie, huh? You know what?
Yes.
Let me pop this on Dixie real quick. I want to go to a daily. Yeah, Dixie was building up some bull div too. No, man, I'm telling you, we've been talking about this. There we go. Tell you what, this is dangerously close to setting up some hidden bear. Then Dixie could really dump out. The Fishers got some room to move too. There's definitely room to go down. But the Z-score is kind of painting a picture on the weekly too. So when I see the Z-score this low on the weekly, monthly though is coming from the top side. So, that being said, let me see here. Is there? Oof, there's not. Man, dodge a bullet there. There is no hidden bull. Now, if we go way back, right, and we're talking, my God, probably what? February, there is a little hidden bull. So we're gonna have to watch this. These Fishers crashing like this, and then the the entropy going back into randomness. tell you what though, the volatility. The volatility is contracting. Actually, it's pretty flat. Let me blow this up, man, get a better look. What the heck? Seen this, went to a point here. That's real interesting. Never seen that before. Huh. So it looks like it is contracting a little bit, negatively correlated. That's why we're getting a little bit of a wick on the bottom here, which makes sense, seeing that. Wow. Okay, let's go in intraday here and see what this thing's going to do. Definitely setting up some hidden bull. Got a strong correlated candle too, so volatility starting to expand, positively correlated. Dixie could be getting ready to pop. So what's that mean? Well, yeah. That means SPY's going to dump. Let me see. But, yeah, I mean, you got the hidden bull on SPY too. But the fishers are down, which I never like. That's one of the things I really look at when, you know, you're waiting for that div to pop. Because we know it's going to. I'm looking at the fishers. The fishers are all down, so probably not time. Plus, look at the candle, right? You got the returns oscillator turning up on SPY. It's negatively correlated, though. That's what you do not want to see. And the entropy's flashing. So, trend imminent. Which way? Depends on what happens with this volatility. Holy mercy. Wow. Well, at least I'm here. At least I'm here. What do you got, Yasha? I need to drink his tea.
Sorry, man. I'm just RNL has captured my attention a little bit, dude. I'm a little bit off site here.
Yeah, it's all good.
I've just been up and down looking at scalps all day, and now I have to do something away from the keyboard for about a minute and a half, and then I'll be back.
Yeah, go.
But what I can tell you, hang on, let me just say something interesting. I don't know what you're looking at here right now. You're already looking at the Bitcoin Daily.
Here is the RMLR Bitcoin Daily.
Yeah, no, I see what you're looking at. Yeah, it's the same thing. So what I'm looking at, our settings, by the way, must be a little different because your power meter is on 30, as is mine. Well, they are very similar, yeah, but the interesting. I must be having my sensitivity on a bit differently on the thing because I'm seeing it start to give me a blue signal on the old power mini.
Okay.
What I can say is that if you look at the projection boss that is situated on the 6th of November, there was a projection boss reversal candle there from the 6th of November, right at the beginning of all that FTX debacle, when all those tweets started flying around and the price started falling. From there, we are literally, like the price action is at the second Laplace down from that distribution right there, which is a 95.5. Yeah, we're literally right below that.
Yep.
If you set it on there, you're normal or Laplace?
This is Laplace. I just have an extra. I got the 9999 out here too.
Okay, yeah. Oh, I see that. Yeah. Oh, right, yeah, I see that.
Yep.
And also, if you look at the reversal candle, then from the 23rd of November, when it started to go up from that little low we had, like the second green day that we had on that the second green day or the second blue candle there, on the 23rd of November. Yeah.
Man. Yep.
We are now between, like, we're above the first Laplace to the upside, right?
Yeah.
So we are above the 68 probability, but still very far below the 95.5 of it, which is at 20.2 thousand roughly. So to me, to be honest, this looks like even though I know the direction predictors are both, you know, significantly correlated to the downside, if the 3012 is and the 1110 is to the downside, correlated with CC direction to the downside, but it's not significant. And because of the volatility readings that we're seeing on the short, medium, and low time and long time lengths, basically what it's telling me is that, like, with all the compressed volatility and all the compressed correlations, we're likely to see continued very nice scalping, like on super low time frames. and then we're going to see a very nice movement coming up. It's getting ready. It's basically setting up. I mean, like this, when you look at this chart on the daily, this is a prime example of the asset building up the next move that is going to pop or drop very nicely one way or the other. And based on the probabilities, right, we are, if you look at it from the top side, from when we started to fall on the 6th of November, we've already come down to the 95.5. We went past it because as Bilbo said, we even shot past the 99.7. We tapped that RMLR to the downside. In fact, both of them on the 3SD back in November 10th or so. And then since then, we mean reverted. And yesterday, we completed that mean reversion. So now, again, we are right above, depending on the power mean you're looking at, right above or right below the power mean. It means basically we're at the power mean. And what does returns do? They revert to they mean revert. Well, that means that when they get to the mean, the next thing that they're going to do is move away from the mean. So there's a very high likelihood that you're going to see, again, nice movement from the mean within the coming days, because that's the natural tendency, right, of the returns and the ensuing price action. And to me, good targets right now, I mean, on this day, they're obviously set up easily. You can see them very clearly on the Laplace distribution candles. But the good targets to me are to the downside, right, in the 15K area, if we go down there again, and to the upside, I'm very much looking towards 18,000 area to the upside in the coming days. I think those are both very realistic areas for us to be targeting. So yeah, we could easily drop a couple thousand from here, or we could easily go up about 1,000 to 2,000 from here very easily, based on just the Laplace and normal distribution targets. And if we return back up to that mean from the projection boss of November 6th coming down, when the drift is on, that's probably why we have a different reading on the Laplace. I have the drift on. I don't know if you have your drift on that one. But if you have the drift on, it's kind of freaky where the mean happens to intersect with, on today's candle, with the second distribution Laplace to the upside, right around $20,226. But again, that's with the drifts on both of those projection bosses. So there is a lot of statistical reason, if we go up, to think that we could easily actually reach that height. But if we did, we would be shooting past the 3 RMLR of the, let me double check. Hold on a second. We would be shooting past the RMLR third distribution band of the 1110, in which case, if we did that, there would be a mean reversion. We would be way above the power mean at that point if we reach that in the next few days. And if we go to the downside, right, the 3 RMLR bands are down in the 15,100 to 14,770 again, so around the 15K area, like I said, is very probable. So my range really that I'm looking at right now for high time frames, although I'm not trading high time frames and taking scalps within them, is between 15 and 20 on 15 and 20.2 or so on a wide area. But I think really realistically between 15.5 and 18.6 or so, or 18, even a bit lower, 18.5, 18.6, between the standard deviation band and the RMLR band. Those are very good probabilities to be looking at on something like a daily time frame for overall movement of the returns and the price action. But again, I wouldn't trade such a high time frame on this volatile asset, especially now. But I would look at this and say, if you look at the returns, if you look at the ensuing price action that's followed, you're seeing a very normal distribution movement of a lot of randomness, right, on the trends, a lot of a lot of randomness on the entropy, right, a lot of random walks, which happens pretty much 80% of the time or something like that, especially on volatile assets like Bitcoin, right? So with all this randomness, after we had that big dump last month and the bouncing around that we've had since then, and the range of that bouncing around on the daily VREs has been consistently increasingly tight. So we've had higher probabilities of trending moves. Like today, we have higher probability of a trending day, and we are seeing trending moves on the lower time frames, and it's within a trending week. That tells me that this week remains a higher probability of seeing trending moves throughout the remainder of this week, even including today, when the volatility is saying, it's going to be a flat day. Maybe we'll move a little bit down. Yeah, you could just see a flat day with a little bit moving down, but if you look at like the 1 minute time frame, right, it's crazy how much the hills are going up and down if you're, have the right position. $100 here, $100 there may not seem like a lot if you're looking at high time frames, but if you look at the hills and the way they're zigzagging up and down, it's not a consistent flat line or a diagonal line going up or just going down. It's constant hills, right? And so there's a lot of appearances of opportunity to be had on these lower time frames, and this bigger time frame gives you a bigger picture. Wow, look at the week. I mean, the weekly is just really telling me, wow, look at that. What you have on the chart right there, that's extremely powerful information right there. I mean, look at where we are. Again, I go back to this again. We have yet to complete the mean reversion to the power mean. Now, I know technically the mean reversion of the RMLR band is, we're talking about when it taps the RMLR band, the RMLR of the third deviation band that it's walked away from. Yes, that is the case. That's the mean reversion that we're talking about in that case. But I also look at the mean reversion to the power mean, because you'll notice when it does pull a move down to the third RMLR band, right, as I've said this a million times, we see eventually a mean reversion to that power mean, not just to the RMLR band itself. Now, it may take some time, and you may have a lot of continuation to the downside or the upside, and we've had mostly to the downside this year, right? But we have yet to see a mean reversion complete to the power mean since the last time we hit an RMLR 3 bands down on the week of May 9th. That week we tapped down through the RMLR, I believe it was the 3012. Mm-hmm. We tapped the 3 band down on the 3012 RMLR. Since then, we've come close to attempting to get to that power mean above, and the time we got closest was the week, a month ago when we fell, following all that nonsense that was happening. And we were very much, it looked like the probabilities were, we might actually, see a rise. And then all of a sudden that stuff happened. And what do you know? Price fell further away from the power mean. But we have yet to tap that power mean, which is currently at around 21.1. And 21.1, right, and is not very far above that 20,000 range I was talking about. And guess what? Just below it is just above and just below are the 3 SD bands of the RMLRs at around 19.7 and 21.5. So could we see a movement to the 20,000 area within the next few weeks, either gradually climbing back up to there and meeting the power mean, or even shooting up on some nice little movement like we had a few weeks ago when everything fell down 20% or so? Very probably yes, right? Now, does it have to be that it's going to do that? No. Could it fall further? Yes, it could fall further. You could look at the last year and tell me that it's not going to fall further. Well, the probabilities are, it fell very nicely over the past year many times when it looked like it could continue to the upside. And it didn't, right? We had one mean reversion in March that completed a mean reversion from when we had fallen below it in January. It took a few months to get there, but we did see a mean reversion to the power mean. And since then, we've been below the power mean the whole time. Why do I go off on the power mean so much? Because it's an incredibly powerful device, right? Because we're trading returns on investments of the log returns on investments, right?
And returns mean revert.
What?
I said and returns mean revert. That's why we like it.
Exactly. Exactly. They mean revert, so they have to eventually zigzag around through the mean. Mm. And right now the mean is falling, right? And the price action's already fallen following the returns in the last weeks. So now we're seeing the price action once again following the returns up a little. Never mind that this week is currently flat and a bit down. There is a drawing near continuing to happen, and there is only so far that the asset can go in any one direction before the pressure to one side or the other is a bit exhaustive. Now, could it be that we pump up just a tiny bit, fail to hit that mean again, and do another fall like we did a month ago or like we did 6 months ago? Yeah, it's possible. But it's likely, right? The probabilities are right now we are within the 68% probability that the price action will not close outside of the first distribution range to the upside or the downside on Laplace or on normal. But if you look at where that mean is, the mean is not beyond the third Laplace distribution or even the third standard deviation. It's literally between the second and the third. And we know that a volatile asset like Bitcoin can do 2 or 3 standard deviation moves very easily. Do I think it's going to do it this week? I don't really care. I don't look at the weekly time frame as a thing to trade. I look at it as a bigger picture to keep an eye on. It looks to me very much like we are going to have a mean reversion occur with probably by the end of the year, and maybe by Christmas. I don't want to say a Santa rally or anything like that because I don't believe in historical patterns repeating themselves or rhyming or whatever, because even if history rhymes, that doesn't mean trading has to, right? This is a random market, so there's a lot of randomness. But it looks like the probabilities are indicating, especially because we just had an intersect of the RMLR, right, on the what was it, on the monthly 2 months ago. Last month we had a very powerful movement. Tomorrow we're going to have an RMLR intersect with the mean on the daily on both of them. So there's going to be a very nice movement within the next 5 days. Like, it's going to happen probably by the end of this week. And does it have to continue to the downside? Well, no, it doesn't have to continue to the downside. It doesn't have to continue the upside, but the probabilities are right there. Like, that we are set to move up on the weekly. It's starting to turn around, right? The direction predictors are starting to turn around. I wouldn't, I'm not going to say, it's definitely going up or it's definitely going down, but I will say this is setting up to move. And that means to me, look at the low time frames, because that's where you will see the changes starting to happen. And the probabilities are very juicy to the upside. Like, it is very possible we could get a nice little pump. It might even just be a fake out, but for those who are trading low time frames, it'll be enough of a real pump to take profit to the upside. It could just mean revert to the 21,000 area to hit that mean, to complete the mean reversion, and then shoot right back down. That's also a very possible thing. I wouldn't put that beyond the realm of possibility, especially on this weekly time frame. I mean, look at it. Like, we've been now in a falling market overall. If you look at it in the macro picture, for more than 400, almost 500 days, like 480 something days, which is quite a long time. In terms of how long the asset has been falling in the history of Bitcoin. Not for looking at it for patterns, but just saying there's only so much Bitcoin that sellers want to sell at discounted prices away from the all-time highs before they want to start seeing their own value of Bitcoin that they're holding still either start to go back up or they don't want to get dump at all. And the likelihood of the people that are holding the biggest bags right now wanting to dump the price, lower than 9,000 or whatever, which is like the extreme, bare limit or whatever that a lot of people, it could go to 0, but, I haven't heard too many people talk about it lower than 9 or 8 at the, maximum. Good, but I don't think it's going to even hit there. I think there's a lot of FUD being spread around by people who have big mouths and big soapboxes, who are talking about the price is going to dump down to 11, 10, and 9 and below, because they want to get people to sell their Bitcoins here so they can pick them up at around 15 or maybe even here, and start driving the price back up. Right? Like big bag holders. I'm not talking about, little retail traders or whatever. I'm talking about the loudmouths who are out there, the exchange owners who talk a lot, or the guys who buy $100 million at a time. I don't have to say who they are. We all know who they are. And they've been talking about these things like, oh, look at the long-term view. It's okay if it drops to 85%. It doesn't have to drop 85% from the high, by the way. We're 77% down already from the high. It doesn't have to go down to 85. Right? Like that's not a magical thing that has to happen, right? And we're also like another, a year and a half or something away from the next halving. Well, again, the halving schmaving, that's just a mathematical thing that happens. That's already priced in. People know it happens. Miners know it happens. Traders know it happens. There's nothing magical about the halving, right? It just happens every 4 years. The only thing that changes at the halving is the amount of Bitcoin getting produced is reduced. That's all. Literally, that's all that happens. And we all know that. And does that mean that there's going to be a run-up immediately around the halving? No. Did it happen last time? No. Did it happen to be that in the year that there was a halving last time, during that year, the price started to move up? It happened to be that in around September, October of 2020, the price started to go back up, but that was after a long grind back up from already a big fall that it had taken earlier in the year. Because again, the price action is random, right? The returns move through these distribution models very clearly. They don't care about halvings. Bots don't care about halvings. Big bag holders can talk to you about halvings all they want, or about other metrics that are not critical to the actual math of the trading. They're filling airtime to distract people from looking at the probabilities and statistics that actually matter. And right now, like we're seeing, if you look at what do you want? You're still on the weekly, okay?
Well,
like when I'm looking at like the intraday charts, like the VRE, or when I'm looking at the entropy charts, and I see, we're walking through these beautiful random walks like you have here on entropy. You look how random it is right now. Like on the weekly, it is so random. And you have very weak correlation to the upside, yes, but it's still very weak. It can go either way, which is why you don't be distracted by the bigger narrative and focus on the time frames that actually are tradable without having to sit around with your hand up your butt or whatever and just waiting around doing nothing. Like, take advantage of the occurrences of opportunity that actually present themselves on a time frame that is useful. Because if you just want to sit around and wait for the bigger picture, I have a better suggestion for you. Don't trade, just buy and hold, and come back and look at your wallet in 10 years. You'll probably be very happy, right? But if you want to actually exploit day to day or week to week or month to month some kind of a trade, you can't be looking at monthly and daily timeframes as a way to actually trade it. You need to be looking at super low timeframes, because that's the only way to actually exploit the little hills that go up and down all day and offer ample opportunity, not just for the bots, but for the big firms that own them. I don't mean the garbage retail bots. I mean the big bots, right? The big boy bots, as we call them, the big boy algos, the things that run the 80% or more of the markets. Like, they're not trading daily timeframes. Those daily timeframes are a result of the hundreds of millions and billions of trades that are running throughout the day. Like, those things they're just prints on a chart. Right? You can look at them, and yeah, our tools work great on them, but I wouldn't waste my time trying to figure out, is this week or is this day definitely going up or definitely going down? No, it's going either way. It's going up or down or sideways. But the lower time frames is what is going to tell you which way it's going to go. Now, do we have great analysis based on the fact that these tools work great? Yeah, it happens to be that generally speaking, when we look at a daily time frame, by the end of the day, the analysis is pretty spot on, but not because we're saying it's going to go to this price or it's going to go to that price up or down perfectly, even though it usually does hit targets perfectly well on the VRE. We're looking at what are the probabilities up and down, what are the distribution ranges up and down, what's the entropy telling us at the moment you're looking at the chart? Is it random or is it trending? And within the bigger picture, is it random or is it trending? How is that playing out? What's the relationship between the lower time frame and the higher time frame? How are they playing out like musical instruments in an orchestra? How are they, all playing together essentially like a symphony? If you can understand how these pieces are moving like pieces of an orchestra, or however you want to make the analogy in your head, it's very kind of, I don't want to say easy, but our tools make it easier to get a better sense of which side of the move you should be putting your risk on and where you should be limiting your risk And it doesn't matter if you trade futures or options or scalp delta. It doesn't really matter. I just think it's much more functional for, especially for new traders or people who don't have a lot of time to trade throughout a given day. If you don't have like more than 4 hours a day to trade or whatever, just a couple hours a day to trade, trading lower time frames gives you a better handle on being able to make the moves better and more correctly, as long as you manage your positions carefully and don't over leverage yourself or don't even use leverage. So that's, it's kind of what I'm looking at right now. I mean, as always, I kind of do the same thing all the time. Like, I don't need to change my strategy of how I change or anything like that based on the different time frames. It's always the same. It's just, it's more, the little buckets are easier to fill out throughout the day than trying to wait for time to pass for one big bucket to fill. And if you're wrong on that big bucket, boy, are you wrong. Right? Like, look at the average percentage that it moves in a given day, up and down on the range, even from top to bottom of a wick, and you'll see that like a percent or two is not unusual on a normal, boring, almost flat day, right? And you can have, and on a weekly, you can have 16% top to bottom on a very wicky looking candle that looks almost flat. And it's like a flat candle, but it moves 16% up and down, And so if your asset's moving 2% on a given day without leverage, consider where you are with your position, consider what you're doing with your trades, and then consider what you're doing on lower time frames. How can you exploit that? Because the hills are going up and down all day. How can you exploit that without over leveraging yourself so that your trades can have significant value, even if they last just 5 minutes or 10 minutes or 15 minutes, right? And keep in mind that if the trade goes the wrong way, you should just get the heck out of it. There's no reason to stay in a losing trade, like at all, because the next occurrence of opportunity, just look at the chart. It's right around the corner, right? Especially if you're trading low time frames, because the hills are going up and down all day. Anyway, so without getting too distracted from the bigger picture that we were talking about on the weekly, that's kind of how I approach the trading in general, is on the lower time frames. I look at the big picture as kind of like a canvas. A background is telling us generally we're still going down, yes, but right now we're in a little movement back to the upside, like on the weekly, and it's very likely that we're going to see more continuation to the upside in the next coming weeks, towards completing the mean reversion. Are we going to complete the mean reversion this year, or maybe by January, middle of January of 2023? I think it's very possible. I think it's even probable. Does that mean we have to? Definitely not. But, more than a year of driving price down with selling from whatever it was at, 69,000, almost 70,000, down to, 15 and change that we had about a month ago and a couple weeks ago. That's a lot of what people call seller exhaustion. Right? There's a point at which these people who have huge bags, we're talking like 100,000 Bitcoin or more, they don't want to see the price go to zero. Like, I can assure you of that, right? And they are doing everything that they can, not just to sell more Bitcoin and then acquire more Bitcoin at lower prices. They're doing everything they can to make sure that the price that they want it to be at is within targeting range at some point when it's ideal for them to get the price to start to move back up again. And that's just a simple fact of, they're going to write off this year for tax return reasons. They're going to write off this year as a big loss if they lost money, if they were just holding bags and not trading it for some reason. But the ones who are trading, they've been, the HFT firms, they've been making money the whole way down, right? But now it comes to a point where there's people who want to get in this game. And there's people who've been burned on FTX and other things who are out of the game now, temporarily or forever or whatever. So there's a huge vacuum. And what do we know about physics? Nature abhors a vacuum. Something will fill that space. What will fill that space? Fresh liquidity. How do we know this? Because every 90 days, every single firm that markets financial products like this has to bring in fresh blood. They do it on a monthly basis, but they cycle through people every quarter. And we just had a big dump a month ago, which burned a lot of people, got a lot of millionaires wrecked, got a lot of billionaires pissed off, right? And got a lot of people out of the space. Some of them are just burnt forever. The small little retail traders are like, forget it, it's a Ponzi. Now you're going to have more curious people saying, hey, wait, hang on, what's this thing everybody's running away from? I should probably be looking into it, right? Because the natural tendency for smart traders is to look at getting blood, buying when there's blood on the street. Well, I would definitely say there's some blood that's been on the street of late. And is that fear over? Definitely not. Would I trade based on sayings like that? Of course not. But to look at this market and to say this is definitely going to drop to 15 or 11 or 10 again, I think that's a little bit, it's a little bit greedy to think that it has to go down to 10. But it could.
If it's going to do that, this is, I mean, if you look at the direction that this power means heading towards the end of the year, not only is it come in, also we've got the projection from the all-time high. All this is intersecting right here, right around 20K at the end of the year. That would be my target for the end of the year. If it rejects there, we could see lower numbers.
Exactly, but there's a very high probability that the asset is going to be running, like people running big bots on these things are going to be trying to buy the pressure, buy up the coin while it's still relatively cheap, and testing out the higher prices and seeing if they can maybe sell at that mean, right? And then maybe they'll see that there's a lot of interest at around 20K, and people are going to want us to get excited, and more people are going to be buying. But it's the bots that are deciding, the big orders, and that's what determines the direction of the returns and the ensuing price action. It's not you and me and other retail traders or even slightly bigger traders. So yeah, again, I still think there's a lot of greed to the downside to say, oh, it's definitely going to 11 or 10. It doesn't have to at all. Could it? Yeah, but it's not probable at this point. It's dropped a lot. It's dropped 77%. How much more does it need to drop? Does it have to drop 85? No, it doesn't have to drop 85. So anyway, man, I've been ranting about this now for a long time, I feel, but
SPX.
I don't know. That's I just think that, and it's not that I'm eternally hopiumistic or anything like that at all. I'm just literally looking at the probabilities. There's a very high likelihood that this asset would have already run up to almost, in the mid 20s, maybe higher, had that drop not happened a month ago. We were rising very nicely, and suddenly, boom, the big fall, which is just an opportunity for people who are smart to buy when it's cheap. And right now, it's still relatively cheap. It's under 17K, or it's at 17K. It doesn't have to go to 15 just because people want it to be cheap. It doesn't have to go to 15 or 11 or 10 just because we like to get some more cheap Bitcoin. It doesn't have to do that. So, man, low time frames, man. Scalp the low time frames. Be effective with the trading. I don't even like to say be efficient, because efficient has a lot of other connotations that aren't even necessarily good, and also it's not always the best way to be. Being efficient isn't always the best thing to do. Be effective. How do you be effective? Exploit the opportunities of occurrences, or the occurrences of opportunities as they appear, because the market will be inefficient on a regular basis thanks to randomness and a bunch of other things. And as long as you know how to take advantage of those inefficiencies, it almost doesn't matter what time frame you're trading, but I find it easier on the lower time frames. Look at these beautiful VREs, man. Look how much.
Oh yeah, it's like look at the dollar. Dollar's at the center of the weekly, and the 4-hour 1SD to the top side. Everything else is at the 4-hour 1SD to the downside.
Yeah. Market correlation. You want to talk about market correlation? Everything is pegged to the dollar. Everything that's pegged to the dollar or trading against the dollar generally goes the opposite way of the Dixie, right? Yeah. It's the nature of the game. And for years, people were talking about, Bitcoin is an uncorrelated asset. Really? Does that look uncorrelated to you?
What? The trade of the day at the open of this market was long Dixie, short everything.
Exactly.
And I'm out of the trade. I'm out of the fucking trade. As soon as Dixie hit the center of that weekly, I closed every scalp. Boom, done.
There you go. And rightly so. And if you look at it, it's just like, come on, these assets
winner.
clearly
Winner.
These assets are highly correlated, and for people to pretend, because they want to fill some narrative, that Bitcoin is going to do something different than the rest of anything else, it's really ridiculous. Like, it's clearly a correlated asset. We know that because it's traded by massive organizations that correlate their trades. How do we know that? Because they have bots that put orders on for assets across the board, talking tens of thousands of assets across the board, equities, commodities, whatever, and they put their orders on in different directions for different asset classes. But in each asset class, you'll find that there's a very high preponderance of orders being the same way in the same direction for different assets, because the returns on those assets tend to be very similar. And you really can boil it down to, there's probably like, I don't know, a dozen or half a dozen assets within the crypto space, for example, that if you just even traded those, you're pretty much getting the returns of all the best of them anyway. Like, that would be your average across the board anyway. You don't have to just pick one or two, but if you wanted to trade up to 6 or something, or maybe a dozen different assets in crypto, you're pretty much getting the best of all of them in that sense. There's a lot of correlations when you have bots literally buying and selling millions of orders per second. Like, it is unavoidable. It's a statistical law, right, of massive numbers. When you have such huge amounts of orders going through, it is inevitable that there will be, at some point, very high correlations. And it happens to be that it's a lot of the time for very obvious reasons. Bots are buying and selling such huge amounts against each other, there's going to be that tendency. And we see it very clearly on the NAR. We see it very clearly on variance. We see it very clearly on entropy. So we learn to use those tools. We make them available for a reason. And, it kills me sometimes that people come into the newbie channel and, they get the free tools or whatever, and they start to use them, apparently. And then they just go radio silent, and they don't ask questions. It's like, what do you, like, if this stuff scares you, ask, because you're very much likely not going to master this yourself. Unless you are just one of these really go-getter type people who is, gonna spend the hours every day Googling stuff and learning stuff, and you're not gonna find the answers to half our indicators, because they don't exist anywhere else for retail traders. They just don't. So you can look up stuff like entropy and whatever, but that doesn't mean it's going to tell you how our indicator works, right? You should be asking questions if you don't know what you're doing with this stuff. Like, there's no dumb question in this area. Even those of us who are using this stuff forever, we ask questions about it too. Like, you think I never ask questions about stuff like this from the guys that develop these tools? I do all the time in our little chat group of the guys that the founders and stuff. And like, do we answer questions as often as we get them? Absolutely, because there are questions to be answered. So if you're new to these tools, ask. Like, don't just get the tools and then go radio silent. That is basically useless. You're telling us, I don't know what you're telling us. You're telling us you're going silent, and I hope it's working for you. But my guess is, if you're going radio silent, you're not using the tools very well, or you're not figuring them out. It's my guess. I don't know. Maybe you are, and maybe you're just a silent lurker who happily trades. Congratulations. And we make all kinds of great documentation available, so it should be available. The knowledge should be available to you to learn it. But to not have any questions, I kind of doubt that. It's not that everyone, most people, a lot of people do ask questions, but there are those who go silent, and I just, for some reason, that's on my mind. I see that, and I'm like, it worries me a little that people come in here, they get the tools, and then they go silent, and I'm like, oh man, are they giving up? Why does that worry me? Because I want them to succeed at using these tools. That's all. I care? That's the only reason. And they're free tools. I'm not even talking about the paid tools. I'm talking about the ones that they can get for free. Like, if you're not learning them, what are you doing? What are you doing with them? What's the point? Anyway, I've said a lot. But if you are using them and you are learning and you are getting on with these things, and they do start to make sense, and something's starting to click, which does happen with time and practice and asking questions, and you want to step up your game, check out our shop channel. I'll just say that as a little I'll throw in a 1 second pitch there. Right? Check out our shop channel. We still have our holiday season going on, our holiday season sale going on. It's like 20% off for 6 months, 40% off for yearly subscription. So very, very, very much worth it if you see that you are starting to get the hang of this. And I highly recommend checking that out if you want to take your trading to the next level, because we have the best tools available anywhere in retail trading, in my opinion. Like, not even a question. So that's all I wanted to say about that. But yeah, thanks for letting me rant on and on, Bilbo. I really appreciate it.
I agree with it all. I agree with it all. Just was thinking, there's a lot of new people in crypto too, and we talk about halving. They have no idea what we're even talking about. So it's like, every 4 years there's a Bitcoin halving, and that means when you are mining blocks of Bitcoin, right? Whatever you got this halving, it's going to get cut in half next halving. How do these miners pay their bills? They sell fucking Bitcoin, right? They mine the Bitcoin, they sell it to pay their power bills, which some of these mining farms, people will be like, there's no way their electrical costs are that much. You kidding me? Each miner's like 1,200 watts, and these guys got thousands of them. Their electric bills are 6 figures every month. They have got to get paid, or their mining system gets shut down, which they don't want. And here's the thing. They're getting half of what they used to get. So how they're going to start to rely on, they're going to have to buy Bitcoin, right? They're going to have to get in the game. They're going to have to make profits that way. There's not going to be enough. So this is going to get real interesting as these halvings continue. Because the market at some point, this thing's going to freaking explode. But we're in this little lull right now, right? All these big, I'm just going to go out on a limb and call them all criminals. They want to get in on Bitcoin, right? They didn't see it. Now they see it. They understand. They might still say they don't. They get it. They get where this is going.
Yeah, this is literally, there's that old saying, what is it? First they ignore you, then they laugh at you, then they fight you, and then you win.
Yeah.
And a lot of people are misreading this as this is the they fight you stage. Actually, it's not. As soon as they start to put in regulation, believe it or not, that's not the they fight you stage. That's actually the you win stage. Because the only reason they put in regulation, or try to, if they even try, which isn't even a done deal,
right?
Far from it, and there's good reason to believe they won't even try, but if they even try, it's because they've already capitulated to the fact that this system is going to be significant, whether they like it or not. So they've already accepted the fact that they've lost, and therefore they're trying to control it so that their friends in high places don't get their butts handed to them on a silver platter.
Yep.
And they've already accepted that Bitcoin is king, and therefore they need to try to put rules in places before their heads all roll. And that means that they've already admitted crypto has won. Right? So we're not at the, and people will say, well, how, they are trying to fight you. No. Actually, if you look at, this is the one interesting thing I will say about the halvings of Bitcoin. The first 4 years, they ignored us. The second 4 years, until the second halving, they laughed at us. The third 4 years, until the last halving, that's when they tried to fight us. When they crushed us in 2017 with that ETF that happened at the all-time high on the day. And then the price plummeted as soon as, or not the ETF, the margin trading, as soon as they allowed, leverage and margin trading for institutional investors, and then boom, the price crashed from the all-time high. And it took a year to get out of that funk. That's when they were fighting us. That's when they started to fight us real big after that third halving, between the second and third halving. Now, the next halving, or the one that we just had in 2020, that's when we already start to see the we win phase. And people are like, well, how can you say that? Well, because the price shot up to a new all-time high, the people in power got scared, and instead of trying to fight it, they're trying to, quote-unquote, regulate it. They're trying to make it acceptable to their palates. They're trying to make it so that they don't get left behind because the train is already running. So what did they do? They had their friends at places like Citadel, etc., or whoever's trading, big bags of Bitcoin, sell the crap out of it with their big-ass bots, because that's what the maths indicated to them when we crashed through the parabola to the upside. They dumped it down hard, had nothing to do with Elon Musk. He liked to take the credit, but it wasn't him. It drove back up during that summer of 2020 or so, yeah. 2021. And then it reached the all-time high by November of 2021. Again, at which point we reached the outside of the parabola again, if you look at it on our distribution models, and it came crashing down again. And the bots just sold. For the past year, they've been selling and buying and selling and buying, but mostly selling to the downside. And we had this last kind of, it doesn't have to be the last, but the most recent big-ass dump following the FTX dump. So again, all these things are just following, they're all just moving within the distribution models, but they are all very conveniently following the story of, for people who like stories, the fight, the ignore, laugh, fight, win story. It happens to be that around the halving is when we have these phases switch over, and that's the only thing that halvings have done. And the reason for that is because there's always an awareness of that story that's broadcast to all the people that consume the news heavily, especially legislators and bankers and all these people. Yeah, they produce it, but they also consume it, right? And they want to feel smarter by knowing the news or whatever. So you have these narratives happening to them, and whether they trade or not, it's happening to them. And we're seeing that. Like, regulation is capitulation. There's no other reason. Because they're saying, hey, we want a piece of it. We want to make you submit to our rules, and then we want to tax you because we want that money. Give me some of that money, right? They're coming for that. That means they've already capitulated. That means Bitcoin already wins, and other cryptos. That's the way I see it anyway. Like, we're not in the they will fight us stage. We are actually now at the shift from they will fight us to we will win, and we've been in that shift for a little while. And the proof of that was the all-time highs that we had last year, and the low that we're having this year, and the very probable likelihood that whether or not they put in regulations now or in the coming months, the people in power with the ability to legislate and the people in power with the ability to buy big bags are getting ready to pull that yacht back and have all their friends on board before this thing goes on another nice big run in the bigger picture. Again, I don't trade those times.
This next run will be unreal.
Yeah.
Yeah.
That's what I think.
Not financial advice, but
not financial advice.
Bitcoin
not post-making advice.
Is sexy, in my opinion, at these prices. Sexy. But yeah, good stuff. A lot of good info today. And one more reason, right? This dollar ran up to the center of the weekly. Just right. That's where I closed my trades. If I was there. Now we'll see the rest of the day if anything recovers, right? Crypto already is. So we'll see. Wasn't a big move, but obviously open market, no brainer. This literally Dixie bounced right off the bottom of the weekly. Right now it's at the center of the weekly. That's why we love these ranges. Something to them. But yeah, I think we've laid enough alpha on the world today. What do you think?
I think so, man.
Wrap this baby up. This is a great stream. So much good info in here. I'm glad I fucking asked you to rip. I couldn't talk anymore anyway.
And I'd go on forever. But
I know. I know you can, my friend. Yeah. Me and you together shut down a conference. It'd be like, hey, there's other speakers. Be like, what? I thought it was us. You mean there's other people that want to talk? Nah.
Yeah, I can.
If they're not talking about the returns, I don't even want to listen.
Exactly.
Well, we're below the 200 moving average on the monthly, and it's like, get out of here, man.
Never broken the 200 except for this time and this time and this other time and that other time. But it's never broken the 200. Oh, but what about those 5 times you just said it did? Damn it.
Yeah.
Okay,
exactly. Then. Exactly.
Anyway, I guess we should wrap it up, huh?
Yeah. Yeah, it was a good time. But the link to the Alpha Trading Discord, where you're going to get a lot of information, be able to get our free volatility starter pack, which is great. That's right. We don't charge you to learn how to trade volatility. We literally give you free indicators. We literally give you free education. We're here to help you. We'll answer any questions. We do these live streams 5 days a week that you can join in on. It's great stuff, but it's all in the description of our video, the Alpha Trading Discord. So yeah, come join us. Other than that, we'll be back tomorrow morning for the market opening, 9 a.m. Eastern Standard Time. Hopefully I'm feeling a little better. If not, Yasha's on a mission.
Yeah, you bet.
He could do all the talking. But yeah, I want to appreciate everybody listening live on YouTube and everybody in the Discord. We'll talk to you tomorrow.
Later.
See ya.